Hi, this week we have three interesting webinars lined up for you. At 10 a.m., we have Resolution 2026, Make Your First Crore, Your Reality. At 11 a.m., we have Building a Resilient Portfolio in Volatile Times, 2026 Playbook. At 12 p.m., we have a NEO webinar, especially for the Middle Eastern investors, on year-end reviews. All the registration links are given below in the description. Please do register and hope to see you all there. Thank you.
The most creamy layer of the Indian middle class actually don't reside in India. That's right. I believe that the most creamy layer of the Indian middle class are the non-resident Indians. There are very specific reasons for this. One, a good part of these non-resident Indians actually work outside India but invest in India. They plan to return to India. This is one segment. The other segment predominantly lives in the West. The first segment, which I mentioned, live in Southeast Asia and Middle East. They are the people who may always want to return to live in India when they stop working. So, though technically they live and work in another country, their assets are here, their investments are here, I think it's only fair that we consider them to be a very integral part of the Indian middle class. Now, I spoke about the second section of people who live in the West. These are people who are broadly unlikely to return to India. Most people living in the West and working in the West are likely to live there. Then why am I including them under the Indian middle class? I include them under the Indian middle class because they still have family residing in India. They have legacy assets that they are going to get from family. The value of these legacy assets are quite high. Over the years, they have become a very significant part of their overall wealth. That is, if you add up the assets that they have built in the West, let's say in the US or Canada or in Europe, with the assets which they own in India through family members, typically parents, then the assets owned in India, which they are going to inherit someday, are rising and increasing their share in the overall wealth of that person. Now, it's too difficult to ignore these assets. In fact, these Indians, who we call NRIs, residing in the West, now are taking their Indian wealth and assets far more seriously and actually looking to see if they can invest in India as well. Because one, they can take out money anytime if they invest in India. Two, the assets they have in India can also be made more productive, and that capital can be grown within India. This is a thought process that is relatively new because earlier everyone thought of just selling everything here and taking it back home, when back home meant the West. So in the case of both these segments, they do have considerable stakeholding in the Indian middle class, directly or indirectly. But are they acting right with their savings and investments in India? That's the question that we are going to raise and answer in this video. Firstly, the main problem point an NRI has with his Indian asset portfolio is asset allocation. It's almost always heavy with one asset class, typically real estate. Now, most of them think that real estate is safe because it can be held on for a long period of time, it's a storehouse of value and probably may never go down. What they fail to see is the merit of financialization over real estate. If you're going to have financialized assets as the primary asset in your Indian asset portfolio, chances are that your compounding will be 400 to 500 basis points above real estate. Now, that's a data point that you cannot ignore. But that's precisely the data point that people fail to take notice. So what we see in most NRI wealth portfolios in India is an excess reliance on real estate today. Also, most NRIs have traditionally been underinvested in equity as an asset class. So they would be having real estate on the one side, they would have a lot of gold on the other side, and then they would also have a lot of fixed deposits, debt instruments with banks, typically the FCNR deposits. So technically, despite being invested in India adequately, an NRI does not get the kind of compounding which a financialized Indian investor is getting. Now think about this. The NRIs' income levels are far higher than resident Indians. Their capacity to save is also higher than resident Indians. The capacity to send money every month is proven and significant. The capacity to invest that money in financialized asset or even fixed asset is very high. The ability to get low cost loans in their country of origin is also very high. With all these things, does an NRI actually get bang for the buck with his savings? The answer is a plain no. And the culprit is misallocation of capital, excess reliance and allocation to one asset class, which predominantly is real estate. They would buy apartments, they would buy land and build very, very exaggerated and lavish assets which don't give them any returns. They would build expensive and lavish assets which don't give them any returns. And by virtue of these things, they don't get enough compounding out of their high saving in another country. In many cases, the assets stay at the same valuation after 5 or 10 years, especially in real estate, especially when they buy apartment properties. So, despite earning a lot, despite investing that money in India, despite owning the asset for almost a decade, people almost always just recover cost. Which means that they are keeping compounding outside their life despite being high savers and very, very powerful investors. The reason is very simple. The NRI has not believed enough in financialization. If only an NRI believed adequately in financialization, he would have seen the full benefit of compounding in his life over a decade or two. Trust me, if you bring compounding into your life early and get the benefits of compounding for 2 decades, you would have managed to push in a lot of your savings, which will be a significant part of your earnings, into the right financialized assets, mutual funds, equity PMS, and maybe even some alternate investment funds. You would bet on the stock market very heavily and achieve a superior compounding over what you have actually done today in real estate. But somehow this has not happened, or it has happened less than it could have been. Now here is that opportunity for NRIs to correct this even in the next market cycle. You need to first financialize yourself. You need to clean up your real estate portfolio. You must only hold the assets where you have very high conviction and you see very strong potential for appreciation. If you bought some dud assets, you need to sell them maybe at cost, maybe a little less, and get out of them. If you are owning multiple apartments, you should own only the apartment which you will use in the future or will be useful to your children in the future. If you are owning some assets which you bought just like that 10-20 years ago, the asset is today much older and it may not appreciate in its current form, you should take the wise decision to convert the capital stuck in those assets into financialized assets. If you do all these things, then you will benefit more than the resident Indian middle class, because you will participate in the same financial assets that the resident Indian middle class is participating and get capital appreciation of a higher order and see compounding play a part in your life like it has never done before. This is what NRIs have to pursue today. If you have assets here which have been invested in different real estate and landed properties, you can convert all this into capital, liquid wealth, and allow that to compound and grow for you. If you do that, your wealth would start doing far more and money would work for you much more into the future than it has ever done in the past. Now, this is something that every NRI needs to think through. Every NRI needs to consider, and every NRI needs to implement and execute. If you do these things, your wealth journey from here into the next 10 years will be very different from your wealth journey in the past 10 years. Thank you very much for watching this video, and let's keep this NRI conversation on wealth going.